Hello and welcome to Luxurious Prestigious. Here in our channel, we are offering an amazing opportunity.
Yeah, here we go.
For everyone to enter and win huge cash prize giveaways. The more videos you watch in full, like them and comment on them, the more entries you will have in the draw. So don't wait any longer and join us now for your chance of winning $100,000 and more. For more details on how to join, go to the description section below. Hey there, luxurious people! Don't miss your chance of winning $100,000. Subscribe now to win big. The top hedge fund manager on Wall Street, David Tepper. Part 2. America's top hedge fund manager. Tepper is one of the highest paid hedge fund managers in the world. And according to Bloomberg, his net worth is currently $16.2 billion, making him the 104th richest person in the world. He also owns a Charlotte football club in the Carolina Panthers. So how could a timid youngster from an ordinary upbringing build one of the biggest hedge funds in the world?
There is so much richness.
Let's continue in our final tale about this incredible guy who eventually become one of the richest men in the world. Share, comment, like, and subscribe to Luxurious Prestigious. And don't forget to have your notification bell on for more updates.
Shut up, it's dirty.
Crisis in finance. Tepper anticipated the markets would crash in the years leading up to 2008. So he sold some of his investments, raised an additional $1.5 billion in cash, and set about looking for opportunities. However, even with his patience, he was unable to find any. And even once he did, the markets crashed in 2008. During this time and in the subsequent moments, Tepper's typically firm conviction began to waver. He became optimistic in the spring and placed a shaky wager on large-cap stocks. By the middle of the year, Tepper's fund had dropped a staggering 25%, and the situation was already concerning.
I feel like I have to laugh to keep from crying.
Though David's clients were accustomed to this volatility, one noted that working with him was like flying with periods of boredom, followed by moments of utter panic. Other clients and David have stated that the greatest time to invest is when the market is least volatile.
Jim, I think we should definitely consider starting to work.
When they are struggling, investing in Appaloosas is a good idea since they always recover. Tepper eventually recognized his opportunity after regrouping, and by the third quarter, he was once again looking for opportunities.
Let's go find him. Go, go.
Additionally, he purchased preferred shares in the insolvent banks, Washington Mutual and Wachovia, in late 2008. Additionally, he spent more than $1 billion in purchases, including AIG's commercial mortgage-backed securities, ultimately becoming the firm over 10% of his capital. Yet,
Oh, Uncle Roger said now.
Appaloosa would still return a minus 28. David then panicked in 2008 due to his poorly timed bet at the start of the year. But as 2009 approached, and other investors were fleeing the market, he started to become even bolder. Like many of David's decisions, this one went completely against the grain. At the time, David said, "I felt like I was alone, and no one was even bidding, not even that guy from Omaha." This was due to the fact that many investors were concerned that the government would nationalize major U.S. banks.
This is actually harder than I thought it was going to be.
But Tepper disregarded the commotion and listened to U.S. officials, who assured them that this wouldn't happen.
Wow, that's crazy.
Tepper started purchasing all the common preferred and subordinate debt he could get his hands on as a result, adding to his holdings of AIG, Bank of America, Citigroup, Fifth Third Bank, Commerce Bank, and Lloyd's Banking Group. By this time, the financial sector made up more than half of Appaloosa's holdings.
We are all in this together. We are the ones we've been waiting for.
Tepper was placing a huge wager despite having no exposure prior to the crash, saying, "This is ridiculous. It's nuts. Why would the government break its words? They're not going to let these banks go under. People aren't being logical." Tepper's conviction paid off.
My, how the tables have turned.
And by the end of the year, when it became apparent to others that the US was going to help out these banks, Tepper's bet paid off. By the end of the year, when it became apparent to others that the US was going to assist these banks, Bank of America had increased by over 330%, and Citigroup had increased by over 220%, generating over $1 billion for the fund as a whole. However, AIG would prove to be Appaloosa's best investment, generating over $1 billion for the company on its own. As a result, several analysts ranked these transactions among the best trades ever done. Tepper's stakes in various businesses, including Wachovia and Washington Mutual, eventually quadrupled as well after being bought out by even larger banks.
He's certainly raising the bar. Damn, this guy is good.
All of these resulted in Appaloosa generating 132% returns in 2009, followed by a 21% return through October of 2010. Approximately the course of this period, Appaloosa made roughly $7.5 billion in total. By 2011, Appaloosa had increased so much that Tepper chose to return $600 billion to investors. With all of this money, Tepper himself received $4 billion from this, making it one of the biggest paydays ever for a hedge fund manager.
I insist you buy me dinner.
According to Tepper, who had previously had a middle-class lifestyle, he was ready to become wealthy. As a result, Tepper spent $43.5 million on a 61,000 square foot Hamptons property that had once belonged to John Carzine, the person who had prevented Tepper from joining Goldman. Tepper then had the house bulldozed so he could construct a bigger and better mansion that was precisely twice as big.
That's so savage of you.
Tepper smirked and responded, "You could say there was a little justice in the world." When Tepper was questioned about it, David is still as assured as he was 10 years ago. Since 1993, when Appaloosa was founded, Tepper has produced great returns that average 25% per year after fees. One of Tepper's more recent and successful distressed acquisitions was with Caesars Entertainment, who's brought in hundreds of millions of dollars for Appaloosa. Recently, Tepper has been gradually exiting the sector, although in 2019, Appaloosa revealed that they would change to a family office and refund the money to their investors, allowing him to devote more time to the Carolina Panthers and his family. However, given Appaloosa's incredible profits over the years, David Tepper might be America's top hedge fund manager. There you have it, the remarkable tale of David Tepper, Wall Street's top hedge fund manager. Inspiring in a big way. What other uplifting tales would you like to hear? Leave your comment down below, and we'll be pleased to give you more encouraging videos. Please remember to subscribe to our channel. Thanks for watching.